What is going on, guys? Welcome back to another weekly recap. Now, this week, even though we had a very strong bullish signature on the weekly, it ended up being a strong bearish week. And the first couple days of the week was pretty tough to navigate because we were waiting for a reversal. Now, let's see what happens, how we could have done better, and what are the things we can learn so we can apply in the upcoming price action and days. Now, with that being said, let's jump right into this. Now, we're looking at the weekly time frame. On the weekly, we had a very nice structure, bullish structure, right? Or if you want to remove the gap and put this here instead, that also works. So we sweep this low with this previous candle and close back as a C2, right? Once we close as a C2, that is very obvious that the next draw on liquidity is going to be the high of this candle right here for all of the assets because all of them close as a C2. And this is also the previous week. This is the one before the previous week, and this is the previous week. So we did not play the current week yet. Now, the next week after this, we expand higher, but we fail to reach to the high on, actually, let me turn this on, the lines so we can see. Now here, with this candle on the YM, we sweep the high, but NQ fails to do that, and also ES. So we got our first stage SMT. That means that we do not have to go higher. And also, if we are looking at the higher time frame, which is above the current week, is going to be monthly. So if we are expecting a bearish month, then we see that we swept the high of the previous month and we are at the all-time highs. So we would want to see some kind of retracement at least back to this monthly gap. And also that is the drawn liquidity for the coming weeks. There you go. Now, and for that reason, because we were looking for the general monthly bias, we were looking for bearish. And the reason all of this happened, we came back and then even though we swapped the high of the month, let me annotate it for you guys. Guys, this is not a quick lecture, so you gotta be patient and we're gonna take our time and learn a lot of stuff here. Now, we see that we swapped the high of the month on all of the assets, but when we drop on the lower time frame, so when we sweep the high of the month, we do not have, so this candle right here, this huge bearish candle sweeps the high of the month, previous month on all of the assets. But as you can see, there is no SMT, no Kraken correlation to confirm the high of the month. And for that reason, we come back, tap into a relevant level. We have to go back and create the Kraken correlation in order to confirm the high of the month. And also because the month is about to close in a few days, in 3 days, that means that we needed, before we open a new month, we needed to confirm the high of the month with a weekly swing so we can continue lower towards the monthly drawn liquidity with the new month. Now, for that reason, we retrace lower here and then we retrace back higher to create the what is it called? The SMT. Now, the first SMT gets created here. Now, that could be enough. That could be enough for a reversal of the monthly, but since we do not have a C2 closure here and also here, that means that we can create, it's also a possibility we create another what is it called, another SMT, or to create a C2. And for that reason, we can still expect bullish prices until we create another stage SMT and then to continue lower. Now, for the first days until we create the SMT, we can expect for longer, for higher prices. And with that idea in mind, let's drop down to the daily. Now, this piece of price action here is from the past week, and it looks like the way we created, we the first day we expand higher, and then we come back and tap into this gap, and then we close as a C2, and our C3 expands and closes like this. Now, when we're looking at this, the most clear draw on liquidity would look to be this high, right? That makes sense. We want the new day to open low first, tap into the 50% of this previous candle, and then to expand to this high. That would make sense. But as you can see, the YM is very different from what it looks like on the NQ and ES. But that's beside the point. Now, if as you remember on the weekly time frame, if we are looking for bearish prices, we generally would want to skip the opposing runs, meaning the bullish prices. If we are expecting bearish prices, we can skip the bullish prices, because if it is going to be a C2, it is going to be harder to trade because it goes higher and then comes back to its open, and that creates a little bit of a difficult price action. So if you're looking for bearish prices, you would want the price to play to the opposing side until it creates the reversal, and then you can trade the expansion. Now, that for that reason, the first day of the week is going to be a little bit difficult. So let's play the first day. Come on. There we go. Now, this is our first day. Week opens here. We expand higher. We fail to reach to this high. This is actually here. We fail to reach to this high, but we sweep the high of the previous day. And that creates also the SMT with YM. But as you can see, this is a confusing price action, right? We have SMT at the highs, we have SMT at the lows. This is a C2 reversal for expansion towards the low. This is a C2 reversal of expansion towards the high, and that creates the decoupled markets. And the reason being is that YM wants to sweep the high again to create a two-stage SMT for the weekly. Now, with that idea in mind, now how could we have traded this day, if not to this high, at least to the previous day's high, right? So the day opens low first and then expands higher to sweep this high. Basically, now we're gonna annotate or analyze this day, even though it was a reversal day. But some of you, if you tried to trade the reversal day, how we could have traded it. But for the most clean price action, you would want to skip the opposing runs and the candles that is going to be a reversal day, which was this one was one of them. So let's focus on this. We're gonna drop down to our first time frame, which is the 4-hour, to frame the today's trade. I mean, even though it was a reversal candle, we could have anticipated this move, at least, if not this one. But this one was also too close to get tapped into. You can see very close, and by a few ticks it reversed back. Now, when the day opens here, drops lower, that is a good signature if you want higher prices. It sweeps this low and closes back as a C2. Now, do we have a SMT here? We do actually. Where's our SMT? Right here with the YM. So YM takes out this low, as you can see, but NQ does not. But also NQ takes out a relevant low. And remember, guys, there's a good tip for you guys. If you are patient and you watch the entire video, I'm going to give you guys a lot of tips in between the analysis. So make sure to take notes. Now this candle, if it came lower, but there was no level that it tapped into. If let's say if there was no, if this level, we did not have this low, and it just came and without tapping into a relevant level, and it's created this SMT, it would be a low probability, because even if one asset takes out a low and the other asset does not, there has to be a level that the weaker asset or the stronger asset for bullish has to tap into, which is this relevant low here. Or if it wasn't a low, it would have to be a gap. So you can see we tapped into this relevant low. The other asset takes out this relevant low. The NQ takes out this relevant low, creating the SMT. Now, when we look at this, obviously the closest price or the closest drawn liquidity is going to be this high right here. And as you can see, the London session gets too close to it, but it fails to take out the high, and that gives us the opportunity for us to trade the 6 a.m. to this high, which is also the London session, the New York session, or 9:30. So let's annotate the New York session, 6 a.m. Let's remove these candles. Now we're going to focus on this, how to frame this at least to this high. If we are expecting a bearish day or a reversal day, the easiest would be this. We can trade to this high. Now, how do we frame our trade within this candle? Let's drop down to the 1 hour. Now the 6 a.m. opens here. It does not have any wick. Let's see the other assets. Okay, we do not have any kind of SMT at this area, right? And that is fine. And let's drop down to the 30-minute time frame because we don't have anything clear here. And also so we can see the 9:30 open. Let's see 9:30. Oh God, this is here. So yeah, actually I would not trade this day. I mean, you could have if you were to be going to be risky, but look, that would be your draw liquidity. You would enter from this candle and then you would be stopped with the next. See, that is why. And also we did not have any kind of SMTs here. And that is why you skip these kind of days. I mean, you can find smaller trades, but if you want to be trading higher probability setups, then you would want to skip this day. On Monday, we print the C2 reversal. However, the only problem would be the decoupled markets. On the YM, we create a C2 for bullish prices. On the NQ and the ES, we create a C2 for bearish prices. That is already showing the decoupled markets. But that is absolutely fine because we can expect this to go towards this to take out this high to create the two-stage SMT and for these assets to drop lower. So let's play the price action and boom, that is exactly what happens. Yeah, but the YM fails to reach to this high. Uh, that does not matter. But yeah, the other assets NQ and ES have a very huge expansion. However, if I remember correctly, this day we had crazy price action. Let's go to the 4 hour and see what happened. Now, as you can see here, this is where the day opens. And the majority of the price action in, what is it called? Developed or expanded during the Asia session and London session. And the only thing we did during the New York was to retrace back higher and then for 10 a.m. to continue back lower. Now, based on this, now here's the thing. So this was the first SMT we had here. If you were to trade the market open, that would be the best chance because we already had the reversal. We created the condition for a continuation. We created this gap. So 6 p.m. taps into the gap and then continues lower, dropping all the way lower here. And also, as you can see, we displace this low. When we displace this low, what does that mean? It means that we should continue lower. And this retracement back was just to create a gap so that 10 a.m. taps into the gap and then continue lower towards this low right here. Now that was the entire idea behind this day. Now let's see how we could have traded this retracement or the continuation. Since this is our 6 a.m., we might be able to find a trade inside this candle to trade it. Now, sometimes when I say, guys, you cannot trade the candles with the large wick, it all depends on the condition, right? Now, here you could have traded it. Why? Because if you are very advanced, if you know what's the price, like the price is going to do, because this continued, this closed below this range continuation signature. If this candle sweeps this low and then it starts to retrace, you can already tell this is going to close as a bullish candle, so that we have this gap here. And then if we want to continue lower or go higher to tap into the next gap, that all depends on the 10 a.m. But we can trade this candle until it closes so it can create another gap. Now, let's see. Do we have SMT here? Yes, we do. So NQ takes out the London's low, YM does not. That is our SMT. Now let's drop down to the 1 hour. And also look at this. Before we go back, look at this, all this low resistance liquidity right here, all of these highs. That's already telling us that even if we continue lower to take out all these lows, then we would have to go back. And can we trade this candle, which is 9 a.m.? Yes, look at this. The candle, the wick is not too huge, so we can trade this, but we would need to drop down to the 30-minute time frame to see if we have any swing here. So we have all this huge drop down, and then at 9:30, right at 9:30, we have this huge drop down. And also, let's see, we could have targeted this, right? Nice. So we have this huge drop down. We have all this lower resistance liquidity above, and also this candle does not have a wick. That is another target, but this would be the easiest target. So 9:30 opens low. We have the SMT. This candle has a smaller wick. Can we trade it? Yes, because this has a small wick, and we can trade it back to these highs. And let's see if what do we have on the 15-minute time frame. Same thing here. Let's say you wanted to wait for a C2 closure, so you would want it for the first candle to close and then to trade 9:45 to this high. See, very simple. You don't even have to care about the 10 a.m. To trade it back to the low, but you could have. Look at this. 10 a.m. taps into the 4-hour gap and then continues lower, and 2 p.m. is the one that reaches the draw on liquidity. How could we have traded the 10 a.m.? Look at this. First, we tap into the gap, close as a C2. However, the only problem would be here at 12 p.m. we created this kind of retracement, which I'm sure there's going to be SMT. But since because we do not trade those times, yes, there we go. There's a SMT. And if we drop down to the 30-minute time frame, you will see much more clear what is going on. There we go. So we tap into this 30-minute gap with the swing. We do not have any SMT here, so this candle creates the SMT, which is 130. Another 90-minute. If you go to the 90-minute candle, there we go. a, what is it called? Sequential SMT, and then we continue lower. As simple as that. Now, that is for the Tuesday. Let's go to the next. So looking at the previous day, as I said, we created the range for continuation. Now we tapped into this order block. We created a gap. What makes sense? It makes sense for the new day to open high, tap into the gap, and then to continue lower. That is what we want. And for the YM, since we are too close to this high, we can expect the higher prices to sweep the high and then create two-stage SMT and then to continue lower. So let's play the Thursday price action. There we go. We sweep the tap into the gap, sweep the high of this, creating the SMT with the NQ with the AES. Now let's see how we could frame ourselves within this candle to trade it to this low. And since ES was the stronger asset for bearish, it was the asset that took out the low, but NQ did not. I was expecting it actually to sweep this low, but it didn't. So let's drop down to the 4-hour time frame to see how we could have framed ourselves within this candle to trade it to this low. And also, since when we have this kind of candles that has a large wick, and even if we do not reach to this low, what we can expect is to reach to some level within this candle, right? So it reaches the 75% level. So let's drop down to the 4-hour time frame. We do not have any relevant level here as well. Let's move this. So do this, and then 6 a.m. candle. So what happened here? We have, where's the day open? Okay, day opens here. Consolidation during the Asia on London, and then at New York, we sweep this high, which is also the previous day's high, and then does this candle trade? Is this candle tradable? Yes, because it sweeps the high, creating the SMT, has a small wick. Can we trade it to the lows? Yes. Where can we target? Since we do not have any relevant level in this area, we could have targeted this low, but unfortunately it did not reach. But since we're trading with the other correlated assets, once the other asset takes out this high, the relevant level, then you can expect it to also reverse from here. Now, let's see how we could frame ourselves within this candle to trade it low. Let's drop down to the 1-hour time frame. And what do we need? Again, we need a swing to be able to trade this day. Now, this candle, is this a reversal candle? It is. Look at this. So we have this, what? We have this sweep. We have a sweep of this high. We have the SMT closes back inside the range, even though it does not have a huge wick, but it is still a reversal candle. But if you say, okay, I do not trust this, then you would drop down to the 30-minute time frame. There we go. Do we have a clear reversal candle here? So we have this first reversal. Let's say you did not want to trade the C2. You say, I'm going to wait for C3. So you wait for your C3. And your 930 is the C4, which is exactly right where you need it to be. So opens here. But the only thing on this day was that the expansion happened super quick. Look at this. Crazy. So it happened super quick, and most of us missed the entry, but there was other opportunities. But the first opportunity would have been this. Look at this. It's very clear. We have the C3 closure, a bullish closure, a bearish closure, and I'm sure we have some kind of SMTs around this area as well. There we go. So we have first stage SMT, and then we have this second stage SMT. Look at this. That is beautiful. And all you need would be to drop down to the relevant time frame and continue lower. Very simple. Now that was for Thursday. When we look at the daily, we can see that we swept the high, closed back as a C2. Look at this clean drawn liquidity on the NQ. Look at this closure on the YM. All of these are hinting towards the continuation, at least to this low. So let's play the Friday. There we go. So opens high first and then continues lower. So let's drop down to the 4-hour time frame to see how we could have framed ourselves within this day. Now, the first thing we notice here is the day opens as a continuation, because on Thursday we created the range for a continuation lower. So look at this. We have this 4-hour gap. We tap into this gap with the 2 p.m. from Thursday. Now it makes sense for Thursday to for Thursday, or I mean, for Thursday, this Thursday opens, which is the Friday's open as well, because it opens at 6 p.m. Now, the day opens here because we already have the reversal put in. It just continues lower towards the main draw on liquidity and it hits their level. Now, since that happened before the New York session, when that happens, you obviously can expect a retracement back to these highs, right? And since you missed the main move, you only need to focus on the retracement back to the internal range. So let's see what we have. We annotate our 6 a.m. candle. That is what we focus on. And then 10 a.m. So 6 a.m. is right here. Okay. Now, do we have an SMT at the lows? Yes, right here. We have SMT with the YM. Where can we target? We can target this high right here. And also for ES, it would be this swing high. So now, how can we frame ourselves within the 6 a.m. candle to trade it higher? But if you want also to skip the 6 a.m. and trade the 10 a.m., that also gives you a chance. 6 a.m. closes as a C2. Now you can trade C3 back to this high. Let's drop down to the 1 hour. Can we trade the 1 hour time frame? This candle, yes, it has a wick, but it is relatively small. Let's drop down 30-minute time frame. Now here would be the only problem. How? Because we had this C2 closure, right? We had this C2 closure. If you wanted to enter based on this and did not wait for a confirmation, then you would have got stopped because you would have put a stop loss below this. But let's drop down to the 15-minute time frame. Once this happens, so here, again, same thing here. If you have entered based on this candle, then you would have been stopped out. But the only reason you would want to wait for this, I'm sure when we drop down to the lower time frame, there's going to be a lot of consolidation. So you would need for the consolidation to clear up and then to enter. So let's go back to the 1 hour. And based on the 1 hour, if you were to trade based on this, then you would have waited for a 5-minute order block and then to trade it higher. Let's say you wanted to wait for this candle to close, so you could have traded the 10 a.m. to the strong liquidity, then you would have done that as well. There we go. So how could we frame ourselves within the 10 a.m. candle? Let's drop down 30-minute time frame. Do you have anything here? No, the 10 a.m. opens. We have this here, but it does not come back. Let's see, 15-minute time frame, nothing here. So sometimes that's it, you just miss the move, and that is absolutely fine. But if you wanted to enter based on this, then you would have waited for a 5-minute order block and then continued higher. And also, if the 10 a.m. opens does not give you a chance, that means that it might probably retrace for a continuation, so which it does. Let's see if it gives us any chance. Boom. Yeah. So if you missed the main move, then you would have waited for this tap of this gap, because that is the low of the 10 a.m. And after we get that, we wait for, we do not have to wait because of the 15-minute candle has a small wick. All you would need to drop down to the 1-minute time frame, find a 1-minute order block, and to trade it to this high. All right, guys, that is it for this week's price action. The majority of expansion happened during the night, so it was a kind of a harder or difficult, more difficult price action. But I'm sure you got the idea of how to navigate those kind of days, even if you miss the first moves. So all you need is to be patient and also wait for your model. All right, guys, thank you for watching. Make sure to like the video, subscribe, and also if you are not familiar with my model, go check out the videos, and I'll talk to you guys in the next video. Peace.